Well, the Reserve Bank's preferred measure of inflation, the so-called trim mean, today fell to its lowest level since December 2021, 2.7% for the year, 0.6% for the June quarter. The headline rate is 2.1%. That's down from 2.4% in the March quarter, and that led markets to suggest the Reserve Bank has plenty of room to cut interest rates when it next meets in 2 weeks' time. The Treasurer also was keen to point out that Australia's situation is unique.
No major advanced economy has achieved what Australia has been able to achieve. Inflation in the low twos, unemployment in the low fours, 3 years of continuous economic growth, Mr Speaker. At the same time that inflation is going up in the US, the UK, Canada, New Zealand, it's coming down here in Australia.
Before that inflation number was released, money markets put the chance of a rate cut at the RBA's August meeting at 80%. And you can see as we go to air, the chance is now seen at 92%. So let's bring in independent economist Warren Hogan, who joins me now. Warren, I mean, this really does, if you like, change the rules, change the numbers for the Reserve Bank making its decision in August.
Yeah, good afternoon, Ross. That certainly is the case. They've been quite hawkish in the last month or so, but this number was a pretty constructive outcome and all but locks in a rate cut in a few weeks' time and probably opens the door to potentially another rate cut down the track if all goes well, because we look like we're on track to get inflation down to the middle of the target band. That's what the RBA had been forecasting, and of course that's what's going to allow them to get interest rates down to a neutral level, which is probably at least one, if not two, rate cuts lower than where we're at now, something around 3.5% on the cash rate.
So, Warren, can I dig into the Treasurer's statements today about Australia and its economic sort of progress? And he basically points out that inflation in other parts of the world, the UK, the US, New Zealand, all rising at the moment, while Australia's inflation is still going down. Is there something special about Australia? Is it better managed, or is it simply pure potluck?
Well, we are generally lagging the rest of the world in this inflation cycle. We did on the way up and on the way down. And if we're seeing the start of a turnaround in inflation overseas, I'd expect that to show up here in the next 3 to 6 months or so. And look, there's nothing in today's data that says that's not going to be the case. And we certainly know that business cost pressures and tight labour markets are all out there putting upward pressure on inflation. So I think it's more that we're a little bit out of whack from a timing point of view with the rest of the world, rather than anything to do with our policy settings. I mean, the standout policy setting for Australia is a massive increase in government spending. That, of course, is going to help employment and keep unemployment down. But we know it's also come at quite a severe cost in terms of higher taxes and lower productivity, which is hurting real incomes or people's standards of living.
And the other thing also maybe this lower than expected inflation number highlights is the fact that Australia's economy is barely growing at the moment. And really that subpar growth that Australia is experiencing, which is one reason for the government right now having its productivity and economic roundtable, is really the fact that if you did have stronger growth, a lot of the spending, all of that stuff would look a little less ominous than it does right now.
Yeah, well, I mean, there's no doubt that the slowdown in inflation that we've seen has been a result of the slowdown in the economy. I mean, inflation today reflects the weakness in the economy last year, but it is an economy that's struggling to gain any real momentum in this recovery phase. We're getting sort of fits and starts of some better consumer numbers, some better business numbers, but it's a pretty lethargic recovery. And of course, the productivity story is horrendous. It's the worst productivity environment we've seen in this country in multiple generations. And we've really got to get on with doing something about this at a fundamental level, because that's our living standard. That's why we're out there all working hard every day, is to try and increase our real incomes and our purchasing power and our standards of living.
But that's one reason that the Reserve Bank has previously cited not being able to cut rates more aggressively. But now, pretty much with the inflation rate and the unemployment rate both seeming to be heading in the right directions effectively, they've got no excuse but to cut interest rates.
Yeah, well, for the next meeting, that's for sure. And given that we had a 6-3 vote at the last meeting, and that the governor has now twice mentioned that we're in an easing cycle, I mean, I think it is a slam dunk that we get a rate cut in 2 weeks. But beyond that, I'm not so sure for those reasons we just discussed, is that rate cuts beyond this sort of level, like down towards 3% or below, really would only come through if the economy was weak. You know, and at the moment, it might be a struggling recovery, but it's certainly not a weak economy in terms of going back into a downturn or anything. So I think we're just looking at one rate cut at the moment.
Good stuff. Warren Hogan, always good to be with you. Many thanks for your time today.